So, Shannan, predictions 2023. What do you think is going to happen in your area?
So 2023, our area, first 6 months, it will be.
Shannan Whitney, welcome back to Property Insights, mate.
Good to see you again.
Yep. How you going? All right.
First week back, so yeah, just getting a bit rusty.
Yeah. So what's the market like? It's pretty rusty too, isn't it?
Yes, it is. Yeah, it's been a slow start to the year, cautious start to the year.
But I notice some of your signs around the area. You end up selling most of your stuff. It looks like you cleared, or at least the signs that I saw that were up had sold on them, and it looks like you cleared most of your stock out.
Yeah.
Are you restocking, or is there plenty of stock for you to plenty of vendor stock available?
I think we'll see similar trends this year, Mark. I think there'll be some caution on the inventory side. Interest rates seem like they've still got some period to go, a few rises to come. So I think that'll have an impact on inventory. And I think in terms of trading, well, it's a question of price.
So what are vendors saying? So I mean, you're talking to these guys all the time and girls. Are they getting nervous yet about where the interest rate's going?
You know, I would say from my observations, the last 60 to 90 days of 2022 was difficult. Is it having an impact on people's budgets, their lifestyle? Yes, I would say it has. And yes, it's flowed through to us in terms of assessing what they're going to do with either investment asset or their principal home. So I certainly have seen it impact people's decision making.
But no distress at this stage?
Look, I wouldn't say there's distress, but I would say that it's certainly tightened things up a lot. And
so what does that do to vendors' state of mind? Does the vendor say, because your game is vendors. I mean,
correct.
If you've got no vendors, you've got no business, basically.
Yeah, correct.
You need a vendor.
Yeah.
That's your asset. The vendor's your asset. So you know how vendors think.
Yes.
If, let's say we have one more rate rise, which you're more than likely going to have one by the look of things at the moment.
Yes.
It's 9 rate rises. That's pretty dramatic.
Yeah.
Let's say vendors are getting reasonable rent, but the interest repayments have probably outgrown the rental increase, I'd say.
Yes.
In most cases. At what point do vendors say, okay, I'm going to sell this property, I've had enough? Because the reason I ask you, Shannan, is because we keep seeing really low auction properties coming up for auction. There's not that many properties for sale.
Yes.
It sort of indicates to me our vendors are cool, they're not going to sell. They're just saying, okay, I'm going to sit back on and give a shit.
Yeah.
Are we so healthy that we don't need to get the inventory out there for sale? Is that what it is? Vendors are so healthy, like pay the mortgage down, or their business is going so well, they've got shitloads of dough. Because there seems to be a reconciliation that needs to be done here. I just don't understand. We've had 8 rate rises, probably another one.
Yeah. And
there's not been a great deal of properties for sale.
Yeah. No, I would agree with that. I mean, my experience with this is that, generally people will do everything they can to hold an asset, whether that be their principal place or in some cases their investment asset. Mostly those decisions are not necessarily driven by financial logic. It's a lot of pride, a lot of ego. And I think in my experience, if they feel that they can ride out, a cycle, then most people will. And yes, they're driven by sentiment too. If they don't feel like they are going to get a good price, in inverted commas, my experience is that most will then look at doing what they can to hold. So I've rarely seen in my area, being inner city Sydney, I've rarely seen a market where I've seen, consistent examples of distress selling. And so far, I haven't seen it, although I have seen a lot of tightness in the system.
Are you seeing any good buys? I mean, are the things popping up saying, shit, this is a good buy?
Yes.
I mean, where you say, well, that's a good buy.
Of course it is. I think the answer to that is that the buying that I saw in the last 120 days, 2022, I saw some outstanding purchases. And certainly from my observations, why do people sell? Typically, I find that most people will choose to make a decision to sell this because their lifestyle circumstances are mostly important enough for them to divest an asset or to make a decision to let something go. That's usually the driver why people want to sell. Usually, those lifestyle situations are so important that they will accept that, potentially last year they would have got 20% more. However, they want to move on. And as a buyer in these conditions, I think it's an excellent time to be buying good quality property at the moment. And to answer your question, do I think that there's been some great buying? Yes, I do. I think there's been some outstanding
and when
buying.
you say great buying, Shannan, do you mean a property would have sold for today for 1.5 million, might have sold for 1.8 million, and are you prepared to give me a few just averages, but like percentages? Do you think, sales pricing 20% less today than they would have a year ago?
Yeah, in my observations, the A-grade properties, that is the best properties in their respective categories. So that can be at the 1 million, 1.5 million, 3 million. Those properties have tended to hold their value reasonably well, maybe lost 5 to 10%. If you go down into the sort of B-grade, C-grade categories across all classes and all price points, in my observations, I've seen 20 to 30. And I think that kind of when you wash all that through, you come up with those sort of numbers that CoreLogic give us, which is 12 or 15%. And I think that's probably quite right.
On average?
On average, I think that's quite right. So last year, in my experience, particularly at the back end of the year, September through to December, spring inventory came up, interest rates were going down, sentiment was very negative. RBA had all indicated there were got more to go. Some of the properties that I saw sell, particularly between the 1.5 and 3 million level, mostly inner city housing, outstanding purchases. A lot of them are great buys, and I think hard to see those conditions staying around for long.
So you think that they're either all been snapped up and there's not going to be any more put in the market, or do you think that then the purchasers are going to start to be prepared to pay more?
Yeah, I think it starts with demand increases. And I think we have to understand, you can always find a market, say in Metro Sydney property, you can always find a market. It's all about where the price is. And certainly from my observations last year, we were able to find a market. We were able to find it quite quickly. And certainly there's a market there to buy. Because I've seen such a reduction in values, and I think because we are where we are in the rate cycle, I think it's fair to say that the market will start to bite, a lot. I think there'll be a lot more biting on prices this year than there was last year. And that is a good sign for me that, we may see the bottom sometime in the next 6 months.
So do you guys have rent roll?
We do.
Yeah. So what are you seeing in the rent roll? So rent renewals. We're seeing, I saw something on TV the other day, but there was a line of like 100 people. You seeing that?
Yeah, we do. But I think you also have to, you sort of have to understand, we're going to book of 4,000 properties in the inner city of Sydney. Certainly the lower end of the market, under 1,000 a week, a lot of demand. You go into the premium end, say 1,500 up to 3,000 or 4,000. That's a very different situation. Certainly at the back end of last year, interest rates had been going up. We found demand really came off. So that's at the premium end. But certainly down the bottom end, I think that reflects probably some of the retail figures you saw today with JP Hi-Fi and various other things. The spending at the lower end still seems to be quite good, and we're experiencing that. Tenants are trying to lock in. Tenants are trying to get leases for 12 months or more, and for the first time, landlords are certainly trying to get their rents up. But I would sort of caution that I'm not sure that we can expect that the rental market perhaps is going to be as bullish and as strong as we maybe first thought.
Yeah. So these $1,000 in your area, that's
yes.
Metro, Sydney Metro. We're probably more this side of the city. When I say this side, Darling side.
Yep.
Are you saying that the return, the yields on properties is starting to prove in that $1,000 territory? In other words, if I'm getting $1,000 a week, if I'm a vendor, I'm a landlord, I can ask $1,000 a week. Are you saying that my returns are starting to creep further up to 5% yield on my property? In other words, it's $1 million property, or
3 to 4.
3 to 4. So I'm still only getting 2.5% return.
Yeah, correct.
It's a pretty shitty return.
It's still pretty shitty return.
Yeah.
And
relatively speaking.
Relatively speaking. And I think the two things to face, yes, values have come down a lot.
Yeah.
So that investment, assessment does look better, definitely. And I think what I would say is that, investors are having a very good look at things. However, we have to accept too, funding's gone up. And I have to say, I think that it's still very hard to read what the rental market's going to do in a sustainable way. And as I said, we were surprised at the pullback at the premium end of the rental market. Was quite challenging at the end of last year.
But I know I'm going to buy property from around this area, for example. Yep. I'm only going to do 2% return. Why wouldn't I just leave my money in the bank at 4%?
Indeed.
And wait.
That's the argument. Although, Sydney.
What is the argument against it then?
Argument against is capital growth.
Right.
So,
But if I think, let me just say, but I might say, yeah, but it's got way to go yet. It might stay flat for a while. What would you say to me as the vendor's agent?
Yeah, as a vendor's agent, my view is buying now buying now when you're going into a cycle. Sorry, when you're in a cycle where there is, where the sentiment is dropping and the sentiment's falling. I find that's the best conditions to do it. I don't subscribe to the fact that we've got to wait until we absolutely know we're at the bottom, think we know we're at the bottom.
Yeah.
And usually, in my experience, that's too late. Last 90 days have been great buying. Next 90 days, perhaps the same. Beyond that, I'd probably say that if we do pause on rates, and the market think that we are close to the bottom, that's when you see the change in behaviour on the buyer side. Usually, that flows through into the environment in which you're buying. And when you are competing, the perception is I'm going to be paying more.
Yeah.
So I don't think that that's far away, but I'd certainly say as a buyer, you want to be buying an environment where you are seeing it drop.
So you're of the school that says maybe the worst is behind us. That's the John McGrath school.
That's John McGrath school.
John McGrath school is we're at 6 p.m. In other words, going more towards 7 p.m. in that we're just on the other side of the rough patch, but we still got to get up to 12.
Yep.
But we're at 7. Are you in that school?
I'm probably in that school.
Yeah. So it's only months.
Yeah, I do. And, I think the last, as I said, I felt the last 120 days, 90 days was a great time to buy. Great time to buy because the sentiment was creating a very, very, very tumultuous environment. That is the best time to buy. That's the time that there's most pressure on a vendor, in my experience.
If the Reserve Bank comes out and says, we can't control inflation.
Yep.
That might be a review of your position, do you think?
Could be.
Yeah.
Yes, could be.
And how important are the newspapers, by the way? I mean, how important is the media commentary?
Extremely important. Extremely important. And again, I think the difficulty for the mum and dad investor or mum and dad homeowner is that it's very hard for them to read what is a great price and what is a bad price. Yeah. It's very difficult. And unfortunately, we do read the papers and we do see these sorts of things, and it's very hard to understand from a property point of view. When have you done well, and when should you go in? And I think the media play a big role in that. And yes, it does influence what people do both on the buy side and the sell side.
And of course, the RBA and the government, they play the media because they want to get the media to do their jawboning for them.
They do.
So if they want to slow things down, slow inflation down, slow growth down, they create a narrative that feeds into the media. Maybe that's a time when buyers, investors, owner-occupiers should start to look at what the media is saying, but maybe think to themselves, maybe now's the time to jump. Yeah. Not jump off the gap, but now's the time to jump into the investment. Yeah, so you've been around a long time.
Yes.
You've seen these cycles caused by different things. Where does this down cycle rate in some of the cycles you've seen where there have been down periods?
It's been sharp and fast. And certainly I'd say the deceleration of values has been quick. I would also say my experience with that is, and that's been backed up by a lot of commentators, is there's a certain period historically that these down cycles last for. And I think 11, 12 months is often how they are. Now, this market was slowing before the May rate hike started. I think from my observations, from what I can see out in the market, I don't think we've got a long way to go, no. I certainly don't think that the conditions are going to improve anytime soon. But again, I look at what are the conditions that creates the best buying environment as opposed to what do the figures actually say. And to me, that's the crucial part. When you're trying to buy Sydney property, whether it be investment or really what you want to be in is an environment where the general net sentiment is poor and the outlook is poor, and that flows through into less competition. That's ideally what you want. My experience is when the market thinks that we are getting close to the end, that's probably a bit too late. And I think we are close to that.
Okay, what about commercial residential mix? So you sell a lot of properties where you've got commercial downstairs and res upstairs. This is a typical, Resi 2C, whatever it is around this area. is a good opportunity, because you did say in the last time we met, you talked about good opportunities in that environment.
Yeah.
And as you know, I invest in those things.
Yes.
What do you think about that?
Is it
hard to get a tenant first for a start, Shannon, like a commercial tenant?
Yeah, last 2 or 3 years have been very difficult.
Yep.
And I'd say the caution is still out in the market. And look, I think also too, if you look at the commercial market in the last 6 months, it's been one of the most challenging markets you've seen. It's very hard to know as a commercial investor what to do. And you just have to have a look at the clearance rates in the commercial side in Sydney over the last 6 months to see, that. And I did see a good example. I saw a property sell 22nd of December. On the 30th of October, had a price of 12 million. Fully leased, 20-year tenant, 7 years to go on the lease.
Just commercial?
Just commercial. Sold for 7.8.
Wow.
Important thing about that is, did the vendor need to sell? No. Did he want to sell? Yes, because there are more important things for his life than continually owning an asset. Did he accept that price was, in his eyes, a poor price? Yes, but he still sold. Now, I'd say that because, that was a very good quality property, strong investment. Still, the returns questionable, but gee, that's a good asset for that sort of money. And again, I've seen that a lot in the last 6 months in the commercial market. I think there's a lot of caution. Most investors won't buy on 3%. For obvious reasons.
Commercial,
yes,
3% commercial return.
And certainly, interest rates are going to stay, where they are or higher. So I think it's going to be a pretty tough year for commercial. The residential commercial mix is really interesting for people. Firstly, it gives them an opportunity to be exposed to non-residential rents, which I think more and more people are interested in. They accept that commercial's being cautious. But I think also too, when you see an asset where there's the ability to have both, that really appeals to people because they feel like they're getting, the best of both worlds. Also too, you have to look at, over the last 10 or 20 years, that Sydney sort of community funded, community-driven sort of commercial type property has really, really gone out of favour. Oxford Streets and King Streets and, Darling Streets and all those sorts of things. Prices have come down a lot, rents have come down, but they're now actually starting to look like a genuine investment. So I've found over the last couple of years, just an uptick in the amount of people looking at them. The prices are about the same as a residential property, but the rents are considerably higher. You take on a little bit more risk, but there's more and more people who are prepared to look at it. So I think it's a good part of the market.
You're taking more risk in that it's harder and harder to get a commercial tenant or a retail tenant, if that's the case.
I think for any investor who's not had commercial experience, yes, their perception is and their fear is that you'll never rent it. Truth is, as you know, you will rent it. It's just about pricing it.
Yeah,
right.
You always get somebody to take over the tenancy.
Yes, you will.
But it is a little bit tougher than a resi tenant because they're either food outlets or they're some other retail outlet, or sometimes if it's low enough, it can be a commercial undertaking. It could be a real estate agent or something like that. But those things do require a lot more management.
They do.
It could be a barber. I mean, I guess you just got to have in your mind, what type of tenant will come in here. It could be a doctor, a vet, those types of things. They seem to be renting out okay. There seem to be a bit more demand for that sort of stuff. But if you think you're going to put a dress shop in there or a bookshop, forget it. It's too hard.
But you also have to accept, you look at your portfolio and the things that you've got in terms of, the role they play in Darlinghurst society. Yeah. These are important things to have, right? And
for Darlinghurst, yes.
Say for Darlinghurst, and I think for most areas, a non-residential component of a particular area plays a very important role in the fabric of the area. It has a lot to do with what people do when they're not at home, and I think as a commercial investor, you have to kind of believe in that.
Yeah.
And not just believe in it, but you've got to also support it. And I think that means trying to support businesses. How can you pull some levers to help them be successful? How can you improve their entry into the world, and how can you do that? So I think it's a much it's an interesting part of the market. I don't think it's as scary as people perhaps first think. But to your point, there is more risk there in getting the right match occupied.
And you've got to be prepared to lose people. I mean,
you do.
I mean, I take a long-term view. I mean, the property I own down the road here, on the corner of Liverpool Street and Darlinghurst Road, it's got an Italian restaurant on one side, just opened, which is great. We've got a Japanese restaurant around the corner. We've got a cafe downstairs and residential tenants upstairs. But we've owned that for like 35 years or something.
Yeah.
So if you're prepared to have a long view on it, it becomes very valuable, because I paid nothing to those properties.
Indeed.
300 grand or something.
Indeed.
It sounds silly, but it was 30 odd years ago. But if you're prepared to take a long-term view, I think you've got to approach these mixed commercial, residential, or just commercial. You've got to approach it differently, and be prepared to have the ups and downs of people going broke, people leaving, people making promises and not fulfilling the promises.
That's right.
But if you take a long-term view, you can do very well out of them.
Yes.
You can make good money out of them over time.
Definitely.
I mean, I remember one stage there, Shannon, I don't know if you remember, but my favourite laundrette was in there.
I do.
Yeah, and they were my tenant. And I remember my brother and I, the guys from my favourite laundrette, they just left. They just bolted. I don't know what happened. So my brother said to me, well, what are we going to do? He said, and we were both working in a law firm at the time. I said, I don't know, we're going to get a tenant, mate. And he said, oh, why don't we run the laundrette? I said, mate, laundrette, I don't know how to run a laundromat. They were coin laundromats in those days. Yeah. So we actually put a manager in there, and we ran the laundromat for a while. And we got the job from St. Vincent's because HIV had just been discovered, and we were able to, our washing machines could do something that allowed you to get around the HIV thing. And because it was hot water, I don't know what it was. He knew all about it. He was only a young lawyer. He was only 25 then. I was like 31. And but we couldn't make any money because we had a manager there. And then my brother said, oh my God, this is no big. Let's sell it and just get someone to pay us rent. So we sold it to a dude, and he got rid of the staff member, and we sold him for nothing, like literally just happy for him to become pay us rent. And 18 months later, this guy sold for 80 grand. And I said, how is it that he could sell something? We sold him for $1. Yeah. He sold for 80 grand. Turned out that what we naively didn't realize is if you own a business like that, you've got to be on top of it because it's cash business. We're getting robbed by our manager. Our manager was taking all the takings, just leaving enough in there to sort of cover the costs of paying the wages. Yeah. And it was a she. And we're getting robbed. And this dude worked that out, knew that. So over time, you have to be prepared to roll with mistakes. And you're right. We take the view that we form part of a community. Yeah. And we take a lot of pride in that. Yeah. And that's the same in this building here. I mean, we just like being part of a community, and we're lucky enough not to have to worry too much about the return. But at the same time, I do like to get the best return out of it. So you're right; it's a good point. If you're in environments where you have resi and commercial downstairs, you have to take a longer term view. You have to be ready to cop things on the chin. But at the same time, you've got to remember you are part of a community, and it's important for the community to be able to come back to these places. Thank God we're fully leased, and we've got Latteria outside. So the boys Latteria, they're legendary around this area.
Indeed, yeah.
They don't pay much rent, but I'm just happy to have them in the building because it's pretty cool. So, Shannon, predictions 2023. What do you think is going to happen in your area?
So 2023, our area. First 6 months, it will be challenging, I suspect. Prices perhaps to come down a little bit more, but I think we've largely seen the reduction. Stabilisation, more inventory back end of the year. I think it'll be a balanced market towards the back end of the year, but I do think I'll start to see demand lift on the buy side. That doesn't necessarily mean you're going to see prices lift, but I think you're going to start to see more demand. It is an exciting year, I think, for property coming up, despite the interest rate and cost for debt. We've had a big reduction in prices. We've had improved income. It's probably the best environment for an investor coming up that I've seen in the last few years.
So basically, don't expect too many more big discounts.
No.
Expect it just to run along the surface for the time being. Maybe there'll be an uptick down the track.
Yeah.
But you're not going to see too many more bargains because the bargains have already hit the marketplace. The price has already been set. The standard's there. Shannan Whitney from BresicWhitney, in my opinion, up there along with Bouris, etc. Definitely one of the best operators in this area.
Thanks.
Good to see you, mate.
You too. Thanks. Cheers, mate.